Hello and welcome to Banking Innovation Summit. My name is Mark Johnston and I'm your host for this next 40 minutes. Now this session is all around sustainable finance. What is it and why is it important? Now in a moment I'm going to introduce our excellent speakers, but first of all a note to you, our audience. We want to hear your thoughts, we want to hear your opinions and we want to get your questions. Pop them in the chat and we'll bring them into the discussion as we can. Okay? Now, let's introduce our excellent panelists. It's my pleasure to welcome to Banking Innovation Summit. We have Alexandra Basirov of BNP Paribas. Welcome, Alexandra. Can you just introduce yourself to our audience briefly, please?
Good afternoon to you all. It's great to be part of today's session. So I'm Alexandra Basirov. I work at BNP Paribas in London, driving the commercial strategy for our sustainable finance practice with the financial institutions.
Excellent. Welcome, Alexandra. And we've also got Symon Garfield of Microsoft. Welcome, Symon. A bit of an intro to you, please.
Yep, thank you, and good afternoon, everybody. So I'm part of Microsoft's worldwide financial services team. I'm based in the UK, in London, but work with our most strategic customers in financial services, in theory globally, but in practice more locally to EMEA and the UK.
Excellent. Welcome, Symon. And moderating the discussion and bringing her comments into the discussion as well, we've got Sharon Chen of EY. Welcome, Sharon. Do you just want to introduce yourself briefly to the audience as well, please?
Thanks, Mark. Hi, everyone. So I'm based in London as part of EY's global fintech practice. And my role is essentially to, as we say, cover the beating pulse of where innovation and financial services intersect, identifying the big themes driving the industry and the players, new and old, who are engaging with them. And obviously, one that's come up increasingly with increasing urgency, but also increasing interest, is this topic of sustainability and sustainable investing. So excited to be here today, and also very much looking forward to hearing what you in the audience have to say or ask the panel here.
Excellent. Thank you so much, Sharon. Welcome to all of our contributors today. Right, let's crack on. We've got some great ground to cover, and it's a very topical subject, this. So, how should we be defining sustainable finance? Symon, I'm going to come to you first on that one, please.
Thank you very much for the easy question. So, I think sustainable finance is a broad, like sustainability itself, it's a broad, ambiguous, and complex topic. I normally start by thinking about what we mean by sustainability, first of all. And I think one way to think about that is in three different ways. So sustainability is a belief that the world's resources are finite and that they should be used conservatively and with a view to the long-term consequences. It's also a recognition that social, environmental, and economic factors are fundamentally entwined and can't be separated. And then its sustainability as a goal is about striving to achieve a world where there's a balance between a healthy and robust ecosystem or natural environments, a safe and equitable human society, and strong economic development. So sustainable finance, if you take that definition of sustainability, sustainable finance, put really simply, is about aligning the world's financial systems to achieve that goal.
Thank you very much for that, Symon. And Sharon, your thoughts on that definition as well. What do you think about that as well, please?
I mean, I agree massively with Symon. From our perspective, both mine and EY's, we see sustainable finance as the financial services arm that essentially incentivizes businesses and hopefully people and other organizations to factor in the kind of the long-term ESG criteria into the way they operate, into the way they go about their daily business, with the end goal of kind of providing outcomes like more equitability, more sustainability, and more inclusion. So very much moving across both the environmental, the social, and the governance aspects of ESG and into the wider society. And the other thing I'd point out is that in our view, kind of what is ESG criteria, or what does it mean to be more equitable or sustainable or inclusive, is actually a bit of a moving goalpost. It's not as defeatist as it sounds, but our idea, our definition, and our expectations of what's considered sustainable will evolve over time, and it's something that we very much see as a growing conversation with what we're capable of doing and where we want to be going forward.
Thank you very much for that, Sharon. Symon, I think you've got something else to add, have you, to that, please?
Yeah, just to say, I mean, we've started with sustainable finance as a very broad umbrella topic, and I kind of gave an initial starting point for a definition. I think to make it meaningful and to turn it into practice and into action, you have to take it a level deeper, which is to look at what does sustainability mean within the context of the different subsectors within the finance industry. So within banking, it obviously means something different than maybe in insurance and capital markets. And also within the banking context, sustainability as a practice has got different implications, both in group functions such as procurement, but also in risk management, and then across the different lines of business, retail, commercial, private banking. Sustainability means very different things in each of those contexts as well.
Great, thank you very much for that, Symon. Let's move to the next question we've got today, and we can bring in Alexandra, I think, for this one. So, should the sector be doing more? How much of a focus is this for financial institutions? Alexandra, your thoughts, please.
Thanks very much for that. And just echoing some of those comments in the previous question, I think it's really important to use the frameworks such as the Sustainable Development Goals and clearly the Paris Agreement. In terms of the industry and where we are as a financial sector, clearly, we all recognize, sustainability is the future. Sustainability is really key to face these big challenges that the world that we face. It doesn't matter if it's a climate crisis or clearly some of the other topics which you've mentioned around the society and inclusion. Reality is, I think everyone can always do more. I mean, we've really got a climate crisis right on the hands, and we're arguably in the middle of this massive battle against it, and we don't have time. I think, we all agree, the private sector, has a major role to play, and in particular banks. And many of them have already embarked on this change, but we mustn't forget this is going to take real transformation, both in terms of business models, but also in terms of mindset. Obviously, new technologies are going to play a great role. Looking at banks in particular, clearly we have the ability to offer finance, we have the ability to offer advice, we also have the ability, obviously, on the investment sides as well, and more importantly, accompanying our clients through this journey. This really is a journey, and just in terms of those first questions, the definition and defining of what we actually are trying to achieve, because one thing for certain is collaboration is absolutely imperative. Many coalitions have already started to be built, and I use one, partly because we're in the lead up to COP, which is obviously the Glasgow Financial Alliance for Net Zero. There is some over 250 asset managers, asset owners, and banks with over 80 trillion now of assets which are meeting goals towards net zero. That's roughly 77% of AUM, which is assets under management worldwide, moving towards the zero goal. So yes, of course, there's always more to do, but I think we also have to take stock that a lot of people are embarking on it. And there are many challenges, but equally so many opportunities for us all to get this right.
Great, thank you very much for that, Alexandra. Symon, your thoughts on that, please. Should the sector be doing more? How much of a focus is there for financial institutions?
So the short and obvious answer, and of course the fashionable answer, is to say yes, financial institutions should be doing more. There's then an interesting question, which I think Alexandra also touched on, which is it's okay to say do more, but actually what are you trying to do in the first place? That's another interesting question. And I actually think that an even more interesting question than that is not should you be doing more or should financial institutions be doing more, but should they be doing something different? Because more of the same might not necessarily produce a different result. So I think don't take your foot off the gas, keep going, but also consider whether the practices and the actions that we're all taking are the right ones or the only ones, or are there kind of more innovative and alternative routes that we could be taking.
Great.
Different approaches come through, and obviously the role of clearly disclosures and data, and also working with the public sector. I think there's a real appreciation that we now need to take a very scientific approach and very much data-led and more rigorous to ensure that we're having those desired outcomes. In the end of the day, we need more guidance from the official sector as well. They've obviously done a lot up until now, especially in a European and a UK context, providing that guidelines around policies and indeed regulation. Clearly, the disclosures around, ensuring and understanding what companies are doing and in turn what we will be financing is absolutely critical. But these things are moving in the right direction, and we're starting to get more clarification of these transition pathways which are required to help meet the net zero ambitions of the Paris Agreement. What is also very clear is I think there's an appreciation that we can't do it alone. So it's not just the private sector, it's also the public sector, but also within the private sector, working and collaborating and really bringing things together. Because in the end of the day, we're in uncharted territories. We have a great deal to learn during this process as well. And as I said, the transformations which are required, I think there's probably a lack of appreciation and subsequently, a huge amount of upskilling to be done as well. There's a famous saying, do you turn the bankers into scientists or do you bring scientists into the banking sector? It is very much a combination of both. And that's why it's so important that we do work also with the likes of academia and other key partners to make sure that we're able to support this transition.
Excellent. Thank you very much for that, Alexandra, and thank you to Symon as well before that. Let's go to you, Sharon. Your thoughts on what you just heard and anything you want to bring in at this point?
Absolutely. Before I switch to an audience question, just my 2 cents is I think financial services institutions have actually a dual role in that obviously they play a huge role in making sure in kind of the whole topic of sustainable financing, sustainable investing, everything from green banking to kind of ESG markers in investments themselves. But it's also worth remembering that they've got to do the second responsibility as a business operating in the world in trying to making sure their business follows kind of sustainability guidelines, whether it's trying to become net carbon neutral or it's adapting certain factors and certain disciplines in the way they operate. So we kind of have to applaud and also, I guess, slightly not quite pity, but slightly recognize that financial institutions are very much trying to address the sustainability question on both fronts, both their internal side, but also on their business itself. So, but quite a lot of the commentary about collaboration and working with sciences and the scientists and academics and taking the data-led approach, and also what Symon was saying about what you should be doing and if you're doing the right things, kind of brings to the question of what are some of the current measurements and metrics for sustainability, and how are people currently defining success, and potentially in your views, is it the right things that they should be looking at? Alexandra, would you like to take that one first?
Sure, I completely agree in terms of being very pragmatic, scientific, data-led, and a very rigorous approach. I mean, I think that is where most within the financial sector recognize they've got to go to. And I think, the challenge one has is there are no standards and norms at this point in time. And there's a real call for obviously a global approach and obviously to ensure that we do get this transparency, because it's very important that we ultimately measure what we're doing and indeed report it as well. But I still think there's a long way to go in that respect, partly because of, the biggest hurdle, both from an investment perspective and a financing perspective, is ultimately ensuring one has the data. That has obviously moved a long way. And you can see the evolution also in terms of different types of data that, historically the financial industry may not have used, be it geospatial data and others. So again, going back to some of Symon's questions, what we've done in the past is not necessarily the way that what we're doing in the future, and indeed now. It has a real role, and hence, we've got numerous data scientists to really better understand and how we can understand those risks, but also more importantly, support those clients in terms of the new technologies that ultimately need the investments as well.
Thanks, Alexandra. And Symon, I imagine you have some thoughts as well about this, particularly potentially on the technology and the data side, if not the metrics themselves.
Certainly, I do have some thoughts on the technology side, but actually, I was going to focus more on the metrics. So there was a piece of work done. It was to the point about academic work. There was a piece of academic work done in 2016 where some researchers noted that although sustainability was a strong trend in the boardrooms across all industries, and that lots of businesses were taking sustainability-related strategies, that wasn't being reflected in success at the macro level. So businesses at the micro level were saying we're doing things, but at the macro level, all of the indicators were going in the wrong direction. The planet's getting warmer, equality is still growing, etc. So they asked the question, why? And one of the things that they came up with was a typology or a different categorization of sustainable business quite generally. And they said that sustainable business as usual was based on shareholder value focus. So it's about profitability for the investors. Then sustainable business level one was really around what they call refined shareholder value, which was bringing in the concept of corporate social responsibility. And really there, that was about saying, okay, we're really still interested in an economic perspective, but we recognize that we must at least be seen to be looking at other environmental and social issues as well, so that we don't have a negative impact. The next level up from that, what they call sustainable business level two, was about taking the concept which can be summarized as triple bottom line, people, profit, and planet, and really starting to generate goals and targets and metrics around all three of those. But there, the focus was very much for a business starting internally and saying, what do we want to achieve? And then how can we change the world? And then the final part, sustainable business level three, was actually starting from an outside in perspective, which is saying, okay, what we want to do is change the world. How can we do that? And then looking internally and saying, and what can we do from a benefits perspective? Which is kind of what I had in mind with my answers to some of the earlier questions about, are we doing the right things? So for instance, although lots of organizations in financial services and other sectors are very focused on sustainability, more often than not, I think they're focused on sustainability in terms of either risk to their business, returns for their investors, or an economic return for themselves. And just to finish the point on the topic of metrics, it's really interesting. If you look at some of the leading banks that are really kind of nailing their brand identity to the topic of sustainability, and then you go to their investor relations page on their website, what you've normally got is lots of information about share price and economic metrics, and then completely separate to that, almost as an add-on, you've got things about the environment and society as well. And the argument is that when we start to see truly integrated reporting, that will be reflective of integrated thinking. And then we're looking at sustainability holistically in terms of economic, social, and environmental impact. So having those metrics and those goals and really reporting against them, I think is key to demonstrating true sustainability mindset.
Yeah. Okay, great. That's great. Thank you very much for that, Sharon. And thank you, Alexandra and Symon, for your answers there. Next question we got on the agenda is, what innovations and new products are we seeing with a positive social or environmental impact? Symon, if we come straight back to you with that one, please.
Yeah, absolutely. So I think it depends which sector you're looking in. And I guess my focus is looking at where we bring together technology and financial services as well, of course. So we're seeing examples, for instance, in the retail banking sector of kind of lifestyle or environmental focused apps or applications. Banking apps, for instance, that will encourage using nudge behavior and nudge theory to encourage sustainable practices with retail customers is a good example. We're seeing things where quite commonly these days, and in the news in the UK recently, we're seeing things like sustainable or green mortgages, where different mortgage rates are offered depending on the sustainability or the energy efficiency of the home. That's also appearing in commercial banking as well, with commercial mortgages. And then more generally, we're seeing interest rates that potentially could be linked to sustainability as well. So an organisation with high sustainability ratings arguably might be a lower credit risk and therefore can achieve or be offered a different credit rating. So those are just a few off the top of my head examples of some of the more common products and services that we're seeing in different areas of financial services, but there are many more.
Great, thank you very much for that, Symon. Alexandra, your thoughts on that one, please.
Absolutely. I think, the retail aspect is very important as much as the institutional, and that's where we're seeing a real, evolution and development, especially within the capital markets arena. If you look at the growth of the sustainable bond market, if you think back 2008, when it first started off with the likes of the European Investment Bank and the World Bank, issuance, barely you could hit it on the bar chart. And just to give you a sense, in 2013, it got to 15 billion of issuance. This year in 2021, we're now at 700 billion. So you can really see the exponential growth in this particular market segment. And in particular, that's double on where we were this time last year. And cumulative, we're now very much hitting that 2 trillion mark. And within this capital markets, it's not just focusing on the green bond market, but we've seen the evolution into social and also sustainable linked bonds, which is very much what Symon touched upon in terms of the interest rate being determined on key performance indicators, often very much science-based targets, of which are called sustainability performance targets. And depending if they reach those, they have an interest rate ratchet up or down, and that's what you see in the loan market as well. So there's been a great evolution and development within the capital markets. That's obviously started to stem, not just across financial institutions and what we would call the supranational sovereigns and agency issuers, but clearly the corporates. And again, while Europe has been very much at the forefront of this, this very much is a global phenomena. Where you've got issuers across from Latin America, the Asian region, and indeed America, very much embracing this new way of financing. I think it does go back to the fact that finance has a particular role in terms of innovating new financial products to help incentivize people to reach these targets. And that was very much the birth of the sustainable linked loan product, which actually started out with a positive incentive loan. It was really trying to drive positive behaviors within organizations, giving a financial incentive to ultimately push through some of those sustainability strategies that Symon touched upon, those corporate social responsibilities, which were often in a corner of a particular organization. But once you started to link those with financials, you suddenly saw the whole organization really embracing it. What is clear, though, going back to it, is obviously ensuring that the market remains of high integrity. And in actual fact, those targets are actually of material and indeed ambitious. So going back to the point of actually, are we doing enough? And indeed having the desired outcomes. And that's obviously something which has been very helpful with the likes of the green bond principles or the sustainable linked bond principles under the ICMA, and indeed the social bond principles, and similarly within the loan market. Very important that the overall capital market grows in a manner that indeed we try and have those outcomes that we're looking for, which is indeed hitting those sustainable development goals and indeed the Paris Agreement. I know Symon raised his hand, so conscious of pausing here.
Great, thank you very much for that, Alexandra. Sharon, let's bring you in. Any comments to make on what you've heard so far, or any questions to bring in from the chat?
Well, absolutely. I mean, I think both Alexandra and Symon's comments were very much hitting the nail on where we are, in particularly regards to the environmental and kind of the climate-oriented aspects of ESG. I think the other thing that's worth keeping in mind is a bit more on the nascent side, but very much in some places government-led. We're starting to see recognition that financial services as an industry is could do more in terms of being more inclusive and trying to meet the needs of people at the more margins of society, or whose needs are just undermet. And that's even in developed markets like within the EU and the UK, where you see whether it's immigrants, students, people with bad credit scores who still very much need financing or access to bank accounts or ability to pay digitally. What we're starting to see is new players, fintechs potentially, or even new propositions designed by existing players who come into the space and say, well, as a economy, we can't do well if we aren't allowing new immigrants to be able to get access to credit and start their own businesses, or we're not doing a good job in providing financing to a country if half the population, or such as women, are struggling to understand what's how best to invest and how to save for the future. So in addition to everything that's been going on trying to move money in ways that save the climate and the planet, there's a lot of saying, how can we rethink the way we offer our financial services propositions such that people are able to understand it better, they're more engaging with it, and they're able to use it to actually live their lives and go and kind of achieve the goals achieve. So I'm going to park there because there are questions that are coming in, and I think one that came in from Angel that targets specifically what Alexandra was saying, which is climate stress testing in banks will penalize brown book loans and so consume more capital. Will this lead again to good bad books like post 2008 and jeopardize lending capacity for green banking and investing? Alexandra, would you like to comment anything on that?
At this point in time, they haven't yet ultimately said that, brown assets will have a penalizing factor. And indeed, arguably a green asset doesn't necessarily mean that, the risk profile is any different. So there's a lot of discussions within the central banks of how best to treat these different classes of assets, because what is important, especially under what we call as the NGFS, the Network for Greening the Financial Services, is not only to green the financial system, but obviously to ensure that the markets have that stability. And clearly, climate change does bring different risks to it. We've got those transitional risks, and we've obviously got the physical risks, be it the increased flooding or increase in sea levels, and indeed clearly weather events with extreme hurricanes and others. So obviously the central bank is very much focused on this, but in terms of understanding what those risks are within banks' balance sheets, and actually only today the Bank of England came out with another guidance of really trying to understand and get you on the journey, and in the UK they are already going through that process of doing what they call the scenario analysis, and indeed in a European context as well. But it doesn't necessarily mean at this early juncture that this is going to impact the capital requirements. I think what is very important is the overall industry as a whole really upskills its level of understanding what climate risk means for the financial system, and indeed support the transition with their clients to really mitigate these risks going forward, and importantly to finance the opportunities and help them in their transition. It needs to be inclusive, it needs to be a just transition, and indeed these risks obviously need to be very much managed. But going back to some of Symon's comments, it can't just purely be all around risk, and naturally everyone knows there will be winners and losers in this transition, and that's why it's so important for banks and financial institutions not just to finance but also to advise them along and to accompany them on their journey. So if they do need the investments and the financing required for those investments to transition their business models, one is there. I just do think that obviously there is a risk approach, but I think we're very much still early on the discussion point around so-called green penalizing factors, green supporting factors or brown penalizing factors, because in actual fact, as I said, just because something is green, it doesn't necessarily mean that the risk profile is any different, from a pure financial terms, i.e. they've still got to obviously have the ability to repay their debt.
Great, thanks, Alexandra. Now, I saw a lot of activity coming from Simon's window when both you and I were speaking. So before we go back to Mark, I just want to give him a quick chance to comment on everything that's being said, if he would like to.
Yes, so that's okay. So I think unsurprisingly, I wanted to just kind of bring in a bit of a technology angle because that, of course, is at least half of my focus in life. And I think when we look at new things that are happening in the market, when I'm working with customers, I look to kind of maybe 4 or 5 particular areas where technology can play a role, looking broadly across the different sectors. So I think the first part is something that Alexandra has mentioned several times, which is data. So, data has got a huge role to play in the whole sustainable finance conversation. I think data for us plays a role in 2 ways. First of all, it's about generating insights and knowledge and information to help us understand the current situation. And also, for instance, you mentioned stress testing as an example, maybe using artificial intelligence, maybe to help an organization understand what its brown and green assets are, and to do that in a cost efficient way. And I think that's the second part of the data story, which is, can we actually analyze data in a speedy and an efficient way? So data is kind of one area that we look at very strongly. The second area is around verification. So we talked about sustainability linked loans, for instance, or green mortgages as an example. I mean, a very obvious example is, can we use IoT technology to help us, validate, for instance, the energy rating of homes, just as an example. The other parts, another area we look at is access as well. Can we open up access to finance to maybe retail investors, for instance? Maybe we can connect retail investors to SMEs that are focusing on sustainability related topics. Can we use digital channels to open up finance opportunities for carbon reduction related projects in the developing world, for instance? So access is another part. And then related to that, and finally, it's about connections. Can we bring people and communities together to help collaborate on sustainability related topics? So those are kind of 4 very broad areas that I look at when I'm thinking about how can we apply technology to the sustainable finance space.
Also to the data and the importance it plays. What we're starting to see is obviously a lot more open source platforms, and that's obviously something that we actively encourage because the more people have the accessibility to the data, that in turn accelerates the ability to make this transition that we all know is so imperative.
Great, thank you very much to Sharon for the line of questioning, to Symon for your answers, and to Alexandra for answers as well. I've got a question actually for Symon I'd like to ask as well. Symon, in your opinion, are there any alternatives to sustainable finance? Your thoughts on that?
Well, that opens up a debate that we probably haven't got a lot of time for today. Becomes a much more philosophical debate. I think for me, and this, I should say, this is my personal view, not the view of Microsoft, I hasten to add. But for me, this opens up the question about whether capitalism itself is actually conducive with a sustainable future. I mean, the basic argument from some people is that capitalism is founded on the idea of infinite and ongoing development. And how can you possibly have infinite and ongoing developments within the confines of a finite world of finite resources? So there's quite a deep philosophical debate, which if I ever do leave the house after COVID and make it into a pub, I'd be very welcome. I'd welcome the opportunity to buy a drink with people and to discuss that long into the evening. But just to answer the question, the other sorts of things that you could look at, just as an example, circularity is a very interesting concept under the broad heading of sustainability, which is potentially an alternative take on things.
Great, thank you very much for that, Symon. It may be too late. Who knows by the time we get out of this mess, but hopefully not. So another question I've got on the agenda, right? So what does the sustainable finance future look like? Alexandra, if we come to you first on that one, please.
Well, I think we all recognise that finance needs to be sustainable going forward. And obviously, we're on this journey. We need to make it happen. And everyone, in the end of the day, when you're making finance decisions, you should really have that net zero lens. Is it supporting the transition towards net zero, or indeed the broader sustainable development goals or not? And if it's not, one really has to question why one is doing that type of financing. I think, in the end of the day, we should be looking that all finance is sustainable.
Great, thank you very much for that, Alexandra. And that question to you as well, Symon, your thoughts?
Was it the question, the future of sustainable finance?
Yes.
Yeah. So I think if I just go back to the kind of the broad typology that I gave earlier in terms of sustainable business levels 1, 2, and 3, and there's a kind of an equivalent model as well for sustainable finance. So I think that taking a holistic view and looking from an outside-in perspective, how can we help the world, and then looking at how that impacts your organizational operations, hopefully is the future. The other way of looking at it, which is a bit of an oversimplification, but it will do with the time that we have available, is many organizations at the moment, I think, still look at sustainable finances in terms of risk, credit risk, reputation risk, increased costs. And I think the challenge is for organizations, financial organizations, to start seeing the opportunity, both as an opportunity for them in terms of financial opportunity, increased revenues, customer acquisition, market share, but then also, of course, in terms of opportunity to actually have a positive impact on the world.
Great, thank you very much for that, Symon. And finally, Sharon, your thoughts on that one. What does the sustainable finance future look like?
If I had to summarize it, I think I would lean towards personalized, which I understand is a very different take, but we haven't spoken very much about, I suppose, individual consumers and the retail investor or just the average person on the street and what sustainability means to them. And I guess if you put yourself in their place, they are being we're starting to see corporates take action around offering more sustainable products or trying to brand themselves as more sustainable. And that's great. And we've already touched upon how much of that is branding versus how much of that is them actually living it. But from the perspective of the individual consumer, or even the individual, I guess, SME, they want to, I suppose, do right by the world. They want to operate in a manner that is, helping, whether it's reducing carbon emissions or it's doing something about climate change or it's trying to have a more sustainable supply chain for food. But I guess the real question for them is, what are the things I really care about? And therefore, those are the things I will put my money behind, whether it's I won't invest in certain industries because I don't support mining or I don't support the way they operate their supply chain, to I want to start shopping at certain retailers because what they do, the factories where they source it is actually pays a sustainable wage for their employees. And so I think going forward in the way that where we see traction will very much be depending on where those individual consumers define as their values and the businesses that will be able to match those particular values. And it will differ from person to person and from country to country as well.
Great, thank you very much for that, Sharon. I think that's about all we've got time for now. So thank you so much to our panelists, to Alexandra, to Symon, and to Sharon. Thank you so much for your input and insight on this subject. Thank you to you, our audience, who've tuned in for this session and all the previous sessions as well. We thank you very much for joining us at Banking Innovation Summit. You can catch any of the highlights on moneynext.tv and look out for us on social, on LinkedIn and on Twitter. Thank you very much. We hope you've enjoyed the last 2 days and we'll see you very soon. Thank you.